Hi, everyone. Welcome back. We have Beneficient. It trades on the NASDAQ under the symbol BENF, and it's on a mission to democratize the global alternative asset investment market by providing traditionally underserved investors and general partners seeking exit options, anchor commitments, and value-added services for their funds with solutions that can help them unlock the value in their alternative assets. Please welcome its CEO, Brad Heppner. Welcome to the conference today, Brad.
Well, thank you. I appreciate the time and the opportunity here to present this morning. I'm Brad Heppner. I'm the CEO and chairman of the board of Beneficient, or BEN, as you're going to hear me refer to our company. What I want to do in the time that we have together is provide a high-level overview of what BEN does, who we do it for, and how we do it. And as I go through my comments, I think you will quickly come to realize that we at BEN hold the belief that we are equipped to ultimately solve a massive industry-wide problem that's growing by the day. You will learn that BEN is rather unique in that we're one of the only providers in our space that does what we do, and that we have some significant moats around our business. I want to spend a few minutes just talking about all of that. So let me jump right into the presentation. We've spent a number of years building out our online platform. When I say our online platform, you're going to hear me refer to that platform as Alt Access. That's just our proprietary copywritten name for the technology platform we have programmed and built. It's a first of its kind in the industry, but there are two very important services delivered from this platform for owners of alternative investments. First, we provide liquidity solutions to owners of private market, illiquid alternative investments. Importantly, when discussing the liquidity that BEN may provide, I mean liquidity in the BEN way. We've built a rapid, secure, online way for customers to exit alternative asset investments for cash, equity, or debt securities based on the customer's individual liquidity needs. And when I say owners of private market illiquid alternative investments, think of the original alternative investments, such as private equity funds or private credit funds, infrastructure investments, private real estate. We'll talk more about what assets and the vehicle types that qualify for our platform, which is built to offer investors potential liquidity out of those prior to the stated exit date that is written into the limited partnership agreement. In addition to that, we also work with general partners that are capital raising, given that it's an incredibly challenging fundraising environment for general partners, and we've recently launched a primary capital product where we finance primary capital commitments into funds that are fundraising. And we do that by accessing our own balance sheet at BEN. And again, I want to talk more about how we believe we are uniquely built to solve that problem for fund sponsors through our GP Solutions team. So let me just jump into some of the data and make the case for these pain points that we see as evident in the marketplace. They're growing. They're growing rapidly, and how we believe we are uniquely built to try to solve these pain points for the industry. Okay, moving from left to right on this chart, you should see two charts. The one on the left is just simply showing the growth of alternative investments globally. This is a trend that has been underway for some time. Give me a second to get my slides working correctly here. There we go. The one on the left is just simply showing the growth of alternative investments globally. This is a trend that's been underway for some amount of time. Our belief is this trend will continue to persist well into the next decade or two. Global alternative investments currently sit around $15 trillion. Some professionals in the industry believe that we will go to 25 trillion in the next 10 years. This is in large part due to big institutions having allocated to alternative investments for many, many years. We put foundations and endowments into that category as well. And what is fueling this next wave of growth in alternative investments is the adoption of these types of investments within individual ultra high net worth and mid to high net worth investor portfolios. And what we often refer to, or what the industry has referred to, as the democratization of alternative investments. This is the growth for which our business model was built to try and address. The yellow line on the chart is simply showing how global secondary liquidity transactions have tracked very nicely to the growth of global alternative investments. A solid statistical correlation over a meaningful period of time. And global secondary liquidity transactions, if you're not familiar with what that is essentially how large institutions obtain liquidity or how they exit their alternative investments before their investment's final maturity pursuant to the partnership agreements. It's a proxy, if you'll give me 1 second, yeah. It's a proxy for understanding our business model and the target markets we're aspiring to serve. Although we're focused on individual investors that might be looking for liquidity or small to mid-sized institutions. Again, we would define those as smaller pensions, endowments, and foundations. This is a very important proxy for us because as you can see, the growth of alternative investments has a very high R-squared or statistical correlation in the growth of overall demand for and marketplace for liquidity. I'll come back to that in just a minute. The second main product that we have, which I referenced earlier, is this primary commitment program, where Beneficient is financing primary capital commitments or investments into funds that are currently capital raising and investing. The goal is to help serve as a catalyst for capital commitments into funds that are fundraising. And again, we'll discuss that here in just a minute. I'd like to put a finer point, though, on the total addressable market that Ben is targeting and aspiring to engage. There's a lot of data on the screen right now on this slide. I don't need to go through it all. You're more than welcome to go through it, given that our presentation is on our investor website, which can be found at trustben.com. I do want to highlight just a few headline numbers on the bottom bar charts. Again, moving from the left to right, you see the $13.7 trillion number. That is the number that I referenced on the bar chart of the previous slide, which represents global alternative investments. But what we've done here is broken it out into three distinct customer segments. Large institutions hold the majority of it at 11 trillion. As we just talked about, large institutions have been allocating to alternative investments for many, many years. They really were the first or early adopters of alternative investments. Small to mid-sized institutions hold about 1.4 trillion. And then you can see high net worth individual investors currently hold about $1.3 trillion too. And this is all just net asset value, just in the US for these two figures, the gray bar and the medium blue bar. Then to the right of that, you see some arrows. In 2023, they transacted about 139 billion in liquidity. 2024 is anticipated to be a record year for the secondary marketplace, potentially eclipsing $150 billion of liquidity transactions. And what we have provided is a couple of assumptions on the turnover rate for our target markets, the small to mid-sized institutions and the individual investors. If those two customer segments had the ability to obtain liquidity, or in another way, receive an early exit from their private market alternative investment, how much of it would they look to turn or to sell? Really, that is a very important question, and quite honestly, one that the industry has not asked or been forced to ask. So that's where we've come up with these assumptions. And you'll notice the assumptions are a little higher than what they are for large institutions. And we at BEN believe there's a good reason for that. Often, large institutions are selling their alternative investments to other secondary buyers or a secondary fund to try to rebalance a portfolio, or they want to get exposure to a different asset class, maybe move out of a particular asset class into a different asset class, maybe into a different fund sponsor or a manager, or into a different vintage year. A variety of reasons that quite honestly have to do a lot with portfolio construction and the general investment strategy of that institution. Well, we believe individual investors would do this very same thing if they could. Those three words are a key phrase, if they could. They just have a hard time doing it. To our knowledge, there's no efficient marketplace like what BEN offers. There's no exchange specifically structured for alternative investors to get liquidity, like large institutions, and to do it in a simple, rapid way, which is what individuals seek. That secondary marketplace was built by and for large institutions. Those tend to be very mergers and acquisition like type deals. So the reason our assumptions have gone from 1.3% for large institutions up to 2.8% for individual investors is what individuals have that large institutions don't have. Those are life events. What are those life events? It's a long list: death in the family, divorce, maybe a small business, and maybe it's my small business needs free cash flow to invest into the business. My alternative investments can provide that source of capital if I sold them. Generational wealth transfer is another potential catalyst for needing liquidity. These are events that individuals experience. Beneficient believes that individuals would take advantage of early access to liquidity to also rebalance portfolios and to think about portfolio construction in a more agile way than what they've been able to do otherwise in the past. And so we've applied these assumptions and come up with the middle bar to estimate what the annual demand for liquidity might look like. And you could see, combining our two target markets, individual investors as well as small to mid-sized institutions, we estimate aggregate average demand over $61 billion annually. We estimate that in 5 years' time, that number grows to over $100 billion annually. In fact, you see $125 billion on the far right. This growth rate is influenced by the growth in alternative investments. As we demonstrated on the previous slide, that as alternative investments grow, this pain point continues to grow as well. And presumably, if there was a path for early exits, that you would also see commensurate growth, much like you've seen in the large institutional secondary liquidity market. So it's a really very large and rapidly growing marketplace opportunity for Beneficient. Yet to date, to our knowledge, no provider of liquidity has successfully tapped into this market for individuals and small to medium-sized institutions. We hear a lot of friction points from investors, and I'm going to now unpack Beneficient's platform and business model to explain how we are attempting to address these friction points. These are elements that have prevented marketplace participants from being able to achieve liquidity at a scale at the potential dollar amounts that we're talking about. As I said before, there's a wide range of alternative investments that we are built to provide early liquidity for, or an early exit for an owner of alternative investments, including private equity, venture capital, private credit, infrastructure funds, real estate, an inclusive list of asset classes. But importantly, there's also a very comprehensive list of product types or vehicle types that Beneficient is designed to work with as well. You can see the gray bars reference how we can and have provided liquidity products for non-traded products, or feeder funds, or fund of funds, and separate accounts, and so on. So a wide variety of vehicle types. And then the bottom honeycombs on this chart just highlight our various products and services that we deliver to recipients of our liquidity. And by the way, the minimum liquidity product amount for BEN to work with is $100,000. So if our customer owned an alternative investment at $100,000 or more, our customer may be eligible to transact. The important question is, how do we do this? How does BEN function at a high level to address this marketplace opportunity? Why hasn't this ability been in the market before? Again, just to reiterate, there's this massive total addressable market of owners of alternative investments who have this very real pain point or hurdle of being able to exit those alternative investments at a date certain, prior to the date the limited partnership agreement states. If you've owned it for 4 or 5 or 6 years and you want out for whatever reason, right now, as an investor, they really have very little, if any, optionality to exit that investment. But here's how our online platform works. I mentioned at the beginning of my remarks, everything we do is built on proprietary technology called Alt Access. Think of it as you would any financial relationship. It's where our customers open up an account with Ben, much like our customers would with any financial institution. And in that account, we will begin the process of transacting with our customer, where the customer provides to Beneficient all of the underlying and required documents that we need to properly value and underwrite the fund interests or interests that our customer currently owns. It is designed to be just a drag and drop environment where our customers are providing us with those fund documents in a safe and secure manner and fashion. When we receive those fund documents, they will be provided to our risk, underwriting, and other internal departments within our organization. And then we go into our process of determining what the value is of our customer's alternative asset or portfolio is, and come back to our customer in the form of a proposal that's delivered to our customer's private account in Alt Access. This is designed to all be done online. Well, we don't have the time during my remarks to walk through the mechanics of how we value and price portfolios. It's an important, incredibly important part of the discussion that can happen offline if you have an interest. What I can tell you is that to date, we've transacted on $1.2 billion of net asset value. That's with a B, 1.2 billion. In fact, I'll show you a slide here in just a minute that highlights that collateral portfolio and its breakdown by asset class, industry sector, and other various metrics that we track the collateral portfolio on. And you will see that we get exposure to this diversified collateral portfolio that we've constructed through a methodology that we call Optimum Alt. And that collateral portfolio of alternative investments, it's the backing behind our liquidity financings. But back to this online transaction. The process is designed to come back to our customer in a matter of just a few weeks with a bid and a proposal. Our customer could accept the proposal online. We would then send our customer BEN standardized closing agreements and transaction documents all online. Our customer is then able to sign through DocuSign, and we close the transaction. Then we deliver to our customer, the seller, the consideration type that the customer selected via the initial portfolio. That's all in exchange for the customer's LP interests or interests that collateralize BEN's financings after closing. And everything that I just described at a very high level, admittedly, there's a lot of very important underlying detail to the Alt Access platform, but everything that I just described can be done with an individual investor directly with Beneficient. But we've also built Alt Access with the intent that it would be highly scalable within the broader wealth management industry. Now, what do I mean by that? Well, Alt Access was built with the idea of potentially white labeling the software and delivering it to any private wealth platform, from a small RIA firm to one of the largest global private banks or broker dealers, or those private wealth platforms that work on a great global scale. The intention is to have Alt Access able to be delivered as a private label customer experience as a SaaS application through various API options to the wealth management firms, with clients in the need of the liquidity and services provided behind the scenes by Ben or by the wealth management firm itself. And that is intended to work, again, not just with advisory firms and not just on the private wealth side, but also with general partners and their investing limited partners as well. So what Alt Access does, though importantly behind the scenes, is create, as I said before, a rapid, cost-effective, secure process to delivering liquidity to the seller. And what the slide now is showing you is on the right, what traditional liquidity providers typically do in a standard, regular way, secondary transaction. Again, this is what I referred to earlier in the presentation as a more typical secondary M&A type transaction. You can see that oftentimes it can take 9+ months for a typical liquidity transaction to conclude from end to end. There are good and understandable reasons why these transactions have historically been limited to very sophisticated investors, both buyers and sellers that have resources and the time to wade through the complexity of these secondary transactions. With alt access and various other enhancements and developments that Ben has created, we believe we are a pioneer in this space. We have built our system to try and reduce that process from many months down to as short as just a few weeks. Again, all online. Now what you're looking at on the screen is the collateral portfolio as I referenced before. This is the existing liquidity financing collateral portfolio that we've built here at Ben through our secondary or liquidity business. Currently 250 funds diversified by geography. Within those funds, a number of very well-known private companies in industry, well-publicized spaces that a lot of investors would currently be clamoring to get ownership for, if they could. Our goal is that every time we provide liquidity to a market participant, an individual investor, or small to mid-sized institution, this collateral portfolio grows and becomes a bit more diversified. Our shareholders then gain experience, the exposure to the economics derived from this collateral portfolio through our corporate balance sheet stack. And then lastly, just a quick highlight of our management team and board of directors. This team has all been together for 5 years or greater. In some cases, you're looking at individuals that have worked together with me for 20 plus years. So a very well-established team with deep domain experience across their various verticals. I also want to highlight the board of directors. Again, notable in their own right, respective areas. Their bios are listed here for you to read. What's not listed here is we have a trust company board of directors at one of our subsidiaries as well. Notably on that board of directors is other highly experienced industry veterans. In closing, let me just reiterate and finish up where I started. And that is to highlight our competitive strengths or differentiators for the business. Clearly, our intellectual property and technology that I've talked about in some detail here is a key differentiator and competitive strength. We built our business to try to take a transaction with all these friction points that takes anywhere between 9 to 12 plus months, and we've reduced it down to just a matter of a few weeks. We designed our system and technologies with the intent of handling potentially high volumes, meaning low dollar amounts of 100,000 minimums, as I said before, potentially high volumes of transactions as investors realize that they can discover an early exit from their alternative investment that they thought were locked up for 10 to 12 plus years. And as we start to introduce this technology onto various private wealth platforms across the private wealth channel, we're excited at the potential adoption and belief that liquidity could sit alongside anywhere where there's a primary offering of alternative investments that investors will desire and like to have liquidity options, earlier liquidity options as well. Being publicly traded and having our public equity as a currency to execute liquidity transactions, we believe is interesting, compelling, and creates interesting optionality for us as a business. Again, one of our core products is when a customer wants to sell their LP interest. Beneficient can either finance that transaction by issuing equity from our balance sheet or from our cash resources. Before I close, I want to reference the disclosures on this slide. Please read that through them. It's important that you understand all the risks associated with Ben and the various disclosures of the company. I would remind you that this specific presentation resides on our public website, trustben.com. And these are the assumptions for our projected target market slide. The various links and websites here on the screen are where you can access not just this presentation, but all of our public filings, as well as information specific to our business. Again, I want to thank you for your interest in what Beneficient is doing. We're excited about the business, the compelling positioning of the business, further growing the business, and introducing the business to our key target markets. As I mentioned before, please reach out directly to us if you have any questions or would like to follow or would like any kind of follow-up information. Thank you for your time.
Fantastic. Thank you, Brad. Yes, like you mentioned, if you have any questions for Brad, you can follow up directly with him. Thank you all for watching. And Brad, please come back in the near future with some more updates.
Okay, thank you.
All right, everyone, stay with us. We'll be right back.